Let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today. All right, KG, the month is winding down, and it seems like this one obviously is going to be a win for the bulls. But I wonder if there is some underestimating of potential pain points to come. What's your take?
Yeah, I would agree. I mean, at the end of the day, we did have a really decent, September, and we are going into the last quarter of this year. But we have seen outperformance when it comes to technology stocks, communication services, and you're starting to see the broadening out of this rally, at least a little bit over the last couple of weeks here. But you are right. I mean, we do have this looming shutdown that's going to take place, and the market's not too concerned about it as of right now. But if we do see it kind of go for, let's say, a week or 2 weeks, then you get a little bit concerned that GDP will be hit, and that could also have ramifications for the broader economy. And today we have quarter end, so there will be a significant amount of volume on the tape, especially when you're looking at small cap and mid cap stocks. We do also have some options expiration activity that's going to be taking place as well. So we might see some volatility in today's session. But you're right. I mean, at the end of the day, the market continues to look at these themes. The power theme, the AI theme continues to be very strong. When you're looking at the market cap weighted index, you really just need to have technology, communication services, as well as consumer discretionary for the most part, really try to outperform in order to hold us up. And that's exactly what we have been doing. Technically speaking, we're still making relatively higher highs as well as higher lows. We have not broken any key areas of support. So until we do so, I think you have to be cautiously optimistic for this market kind of moving in to the remainder of the year. And the first 2 weeks of October could be a little bit choppy, and then that sets us up for that Thanksgiving and that holiday trade towards the end of the year. Lower volume, usually it's bullish for the markets, and let's see how we actually end up this year.
Okay, KG, lately the threat of a government shutdown has essentially been like a non-event for markets. But this year, I wonder if there is some more potential for it becoming a market-moving event, or one that the market will pay attention, especially since the Labor Department has made clear we won't get that report on Friday if the government shuts down.
Yeah, it's not going to be the first time that we have not seen the BLS jobs report on Friday because of a government shutdown. That's probably just going to lead to us actually focusing on the ADP report that we're going to get out on Wednesday, focusing on that a little bit more, and then probably utilizing some other third-party data, Indeed, jobs open, rates, things of that nature, in order for us to get a clearer picture as to what's happening with the overall labor market just in general. So that could be a risk. Once again, for a week or so, the market can shrug it off. If you start seeing it a little bit more prolonged, like the first Trump administration, where we went over 30 days, that's where you get a little bit concerned. And in that particular situation, we did see the markets pull back around 6.8% or so. And that's where it becomes a little bit of a headache. So I think this is kind of a waiting game. What's going to be interesting, Diane, and we're not going to get into the politics, but this is kind of different this time around. We're not too close to midterms, and we're in the second Trump administration, so he is a little bit more bold. And the Democrats really don't have that much, power, if you will, as far as trying to adjust legislation. So this is actually going to be an interesting fight this time around. And judging by the president's post yesterday on Truth Social, it doesn't seem like he's relenting anytime soon or providing any type of olive branch.
Well, the last time we had a longer shutdown was during Trump 1.0. So we'll see what happens. Hopefully, obviously, this is shorter rather than longer, because then you do start to get some impact when it comes not just different reports, but different sectors. You think about contractors for the government, defense contractors, and we've seen defense recently catch a bid. So it'd be interesting to see what happens there. At the same time, we have gold hitting records, and that seems to be a hedge just towards any potential volatility. What's your take?
Yeah, I think you have the physical market obviously continues to see a bid. You are seeing a lot of these central banks continuing to increase their inventory when it comes to gold, diversifying themselves away from treasuries. And then you also have the speculators that are kind of looking at that 4,000 level as that key area of resistance. Now, you can make the case that from a technical standpoint, this pullback right now is not really too surprising. We are hitting an upper end of support, but the trend remains to the upside. And as we continue to have these risk events being priced into the market, geopolitical risk events that we have not only this week, but over the next couple of weeks here. You also have the government shutdown, Fed policy. What if we do see a really strong jobs and labor report on Friday, if that report does come out? Do we back out Fed cut expectations for the remainder of the year? There's still a lot that is there. and gold continues to move higher. I think it's also kind of telling you too that maybe we are a little bit stretched in some pockets of the market. Maybe the uncertainty is definitely still there, and maybe we continue to see this rise. And I think you kind of focus actually on the silver market, a little bit of a higher beta play within the metal space to kind of give you that signal that the party's over. And for silver, it continues to run pretty hot here, trying to hit that area of resistance of around $50. That might be still kind of ramping up. Silver is pretty much at the same level that gold was at the start of the year when you're looking at the technical setup here. So definitely risk off type of tone. But if some of these factors kind of back out a bit, you could also see gold kind of retracing pretty aggressively here. But higher highs, higher lows, once again, technical trend still to the upside.
Okay, all right. So let's talk the chip space for a moment here, KG. Nvidia getting some more bullish views out from the analyst community, also Broadcom. Let's start with Nvidia.
Yeah, so for Nvidia, we have KeyBank raising their price target to $250. That's up from $230, and they keep their overweight rating on the shares here. They obviously they're actually very bullish when this comes to this chip on wafer on substrate products that's going to be ramping up here. It's obviously going to be very key to build out these AI chips, if you will. And they do believe that the supply for 2025 and 2026 is going to continue to ramp to the upside, not only for Nvidia but also for Broadcom. And they kind of make mention of that, and that's why you're seeing their price target being raised. And they also raised their price target on Broadcom as well to $420. That's up from $400, and they're maintaining their overweight rating there. They just see a significant upward revision to the 2026 chip on wafer on substrate supply, basically increasing by around 160% on a year-over-year basis. And they also make mention when it comes to Broadcom that the GPU, the TPUs that Google is trying to roll out, the TPU 7E, is going to be delayed, and so that actually should continue to be very strong for Broadcom, which is the provider of those processing units here through 2026. So they are very optimistic on the AI front, on the semiconductor front. They continue to raise their price targets up. Citi's doing the same. They raised their price target on Nvidia up to $210, up from $200. Once again, kind of signaling the same thing when it comes to chip demand for 2026.
Okay. So KeyBank out with both price target hike for Nvidia and Broadcom this morning. All right, let's get your targets on the S&P 500. We've got, as you mentioned, not just the wrap up of the month, but of the quarter. So what's your target to the downside and upside for the S&P 500?
Yeah, to the upside, 66.85. To the downside, 6,600. I'm looking for a lot of volatility, Diane. I would not be surprised if you actually see a pretty decent flush in the day, and then look at the last hour and a half, and we actually see this slingshot rally going into the close. That's what we really have been seeing the last couple of quarter ends, and I would not be surprised this time around we do the same, as once again we have adjustments on the options front on the SPX as well as INDX.
Okay. All right. We'll leave it there. That's our Kevin Green, Senior Markets Correspondent. Thank you, KG. Appreciate it.